Hey Alpha fam, let's do a quick market update before we begin. I do want to say that nothing in this video is financial advice. Everything is for educational purposes only. This is just my own analysis on the market. Also, if you're new to the channel, if you could please give us a like, comment, and subscribe. We really do appreciate all of the support. Now let's get into the market, guys. We had a big day yesterday. FOMC. We talked about this yesterday, guys. I said there was only a few scenarios, and the one that I was really hoping for is the one that we got. We got the 25 base, well, honestly, the 50 basis point would have been the dream scenario, but we knew that was totally not going to happen. What we did get, though, was 25 basis point cuts, but more than that, we got them to start buying $40 billion of T-notes, all right? These are treasury bills, guys, and why is this important? This is what I call stealth QE. They just bailed out the repo markets a couple weeks ago. There was a repo market crisis, and I want to show you guys the chart that really matters the most, and this is the total balance sheet for the Feds. And me and my community have been talking about this thing for over a year now. We've talked about it so much they're probably tired of me talking about this chart. All right, this chart is a very interesting chart, guys. It basically gives you both the quantitative easing and quantitative tightening of the U.S. government. Fun fact, back in 2008 is the first time they ever did quantitative easing, and this was on the back of the housing market crash back in 2008. We've only ever stopped quantitative tightening twice in history prior, and we just did it the other day. What I'm expecting is this chart, now that this thing is kind of flatlined, and really what they've done is they basically have been slowing down quantitative tightening. They were doing like 95 billion, they go to like to 60 billion, and they slowed down till they went to 5 billion. They stopped quantitative tightening on the 1st, and then on the 10th of December, they announced this. So what we're expected to see is this thing kind of flatline, and then all of a sudden, we expect probably early next year, this thing to start kicking up, all right? When that happens, guys, I think we're going to see a surge of liquidity come into this market very, very soon, both between quantitative easing and the stimulus checks that we got coming next year. It looks extremely good. All right. Now, I told guys this because I had a couple of guys like, well, why are we in the red? Like, if we got all this good news, why are we in the red? That's what happens with these FOMCs. If you actually come over, guys, most of these FOMCs, if you go to Google, we talked about this not too long ago, guys, but if you come over to Google and you type in FOMC meeting schedules and go look at these dates, we'll just go back to July 29th and the 30th. You can see what happened there. You know, this is right over there. Let's see. This is June. We go up. Oh, yeah, July. You can see it. The 29th to the 30th. Oh, right here. There it is. And we dumped for a couple days afterwards, and then we made new all-time highs. This is kind of the MO for these events. You kind of pump into it. It's a buy the rumor, sell the news type of a thing right there, guys. So I was expecting it, but then right now what we have is we're actually starting to make a move back up. So to me, I think what happened was they swept the liquidity that they wanted to sweep. They've kind of got this stuff out. They come back down here, and this gives really interesting levels for a lot of these guys, especially these institutional buyers, to buy this stuff up. You know, this is where they want to buy at. And with that being said, guys, I expect this to continue probably because, you know, you got to think today is what, Thursday? We got Thursdays today, guys. Tomorrow's Friday. I think we'll see a continuation through the weekend into next week of us going up. What I would expect is because we have this 50-day EMA, we are going to have to retest this thing here shortly, and I think it's going to be in the next couple of days. When we reach that level, we'll obviously be watching it very closely. Looking at the 4-hour, you can see we broke right back below the 50, but this is when I call consolidation. When we're kind of snaking, when this 50 days kind of going sideways and we're kind of snaking price action in between it, that's what I consider. We're kind of in an accumulation zone where there's a local bottom, and basically the market is moving back up, and it basically in structure lower highs and higher lows. And that's all that we've kind of done right here, guys. If you remove all this, see this right here, guys, we're just making higher lows as we go along and higher highs. All right, so this looks pretty good. Obviously, we need to get back above the 50. We come over here on the hourly. We're getting close to it right now. I think we'll be probably back up there by the end of the day. I don't expect us to have that red of a day today, guys. Honestly, we just really kind of retraced a lot of that pre-FOMC move, which is totally normal. We tend to do this afterwards, and then once we do it, we tend to find new highs afterwards. Also looking at TradFi markets, they're doing the same thing. You can come over here, the 5-minute chart. They did the same exact move. They had a little bit of a pullback. They found a local bottom, and now they're moving up pretty aggressively. You got the S&P 500, did the same thing, opened up, pulled back. Now it's doing the same thing. It's making a new high. Honestly, guys, I wouldn't be surprised if we don't see a new all-time high in the S&P 500 by the end of this month. I mean, it's really not that far away from it. Same thing with the NASDAQ, guys. I mean, it's just kind of looking at this right now. I mean, it's a little bit below, but I wouldn't be surprised you don't see this thing kind of reach up to a new all-time high. Look at the buyers that stepped in and bought that. I mean, you can see that wick. You know what I mean? This is a straight nail. You know what I mean? And this is a bullish nail. And with that being said, guys, I think that we've kind of weathered the storm through the FOMC. I don't think we're going to go down too much further. I think we've already had the chance to do that if we were. This also, you can see Bitcoin dominance is still below the 50-day. Looks pretty good right there. And then also, this is the thing that a lot of people I haven't seen talking about. We've not only broken out of this, but we've done it with some force. It looks like we're just kind of wanting to retest this level here one more time before we get a continuation up. And then same thing with this. This was something we broke above. All right. Now we've come back below. I would expect probably the next move on Ethereum to reclaim this and then retest and then continue to move up. Ethereum's been showing a lot of strength lately, guys, and I think it's not something you should be fading because, again, even if you're not holding Ethereum, you still should be rooting for Ethereum to do good because I think it is one of the biggest gateways into your altcoins catching a bid, especially depending on what ecosystem your altcoins are on. And like I said, the market is starting to move up pretty good. We're getting a pretty good reaction right now. I wouldn't be, honestly, guys, I wouldn't be surprised. See, look, this is the 1-minute chart. All right. All right. And then we got data that comes out today. What time? Actually, I think it just got released. It might have just got released a couple minutes ago. Yeah, we got, but these are all building non-farm payrolls. We also have unemployment. But again, this is something that I wouldn't be worried about because I think we're going to get it. You can see right now, I think we've made a local bottom. I think we've swept the liquidity, and now I think it's time to get the bears. It just makes the most sense. They're the most liquidities to the upside, and we just understand how these market makers work. They're going to come squeeze out liquidity, guys. Other than that, everything looks all right to me. One thing I did see is the Dixie. You can see right here. All right, well above, crack below this, rejected, and now we've got to move down. It's no coincidence that you're going to see your bags going up when the Dixie goes down, guys. Remember this. There's a direct correlation with the two. And then also, too, just kind of getting another kind of generalized look at the market. Things look pretty good, guys. We've had a lot of adoption happen, not just, with the FOMC yesterday, but even like Say is partnered with a phone now and a phone company. That was a big thing. You have a lot of these different companies. Ondo just did another partnership. You got a lot of adoption happening in real time, guys. And you guys are absolutely going to look back at these times and you're going to say, wow, I was here before this actually got like where we're at now. I think crypto is going to be something that's incorporated in every facet of your life, regardless if you know what's happening or not. All right. With that being said, guys, like I said, I think the market's looking pretty good. I think we found our local bottom. I think we move up from here. Other than that, if this is your first time to this channel, if you could please give us a like, comment, and subscribe. And also, if you're looking to actually understand this stuff, if you're trying to incorporate and understand what we do over here at Alpha Syndicate, which is incorporating macroeconomics, fundamentals, and combining that with technical analysis to give us a real edge over the market. You can't only look or approach the market from one of these because you're really, handicapping yourself in another, area. So if you're looking to really kind of get an edge on the market, you want to be able to network with other people. If you want to be able, to get a part of a community where you don't just feel like you're just another random person, click the link below. We'll see you inside.